Welcome back, guys. Now let's look at cancellation and reissuance. When an entity has been through a capital restructuring or there has been a significant downturn in the equity market through external factors, okay, an alternative to repricing the share option instead of changing the price of the share option is to cancel them. Okay, cancel the share option and issue new options based on revised terms. Okay, that's what we mean by cancellation and reissuance. And the end result is essentially the same as an entity modifying the original options and therefore should be recognized in the same way. So, as well as the entity, two other parties may also cancel an equity instrument. Could have cancellation by the counterparty, who could be the employee, or cancellation by a third party, like a shareholder. Note that cancellations by the employee must be treated in the same way as cancellations by the employer, resulting in an accelerated charge to profit or loss of the unamortized balance of the options granted. Okay, so that is just introducing cancellation and reissuance. Okay, now let's look at cash settled share-based payment. We'll look at that in the next video. Thank you.